Sudip Bandyopadhyay joining us on the show, Group Chairman at Indie Trade Capital. Good afternoon, Sudip. Thank you so much for joining us on ET Now. And let's get your quick view coming in on the auto pack. Entire auto pack, what exactly is happening, a slew of launches coming in, be it the four-wheeler players, be it the two-wheeler players. But what's even crucial is the fact that what is happening at the inventory level for most of these companies, given the fact that the inventory levels are pretty high. Also, the fact that they're giving a lot of discounts. Do you think the future is going to be brighter, or is just going to die down now for the auto sector?
Well, I will divide the entire auto sector into two segments probably. One is the passenger vehicles, and the other is the two-wheelers, four-wheelers and two-wheelers rather. As far as the two-wheelers are concerned, we are positive that I think with good monsoon and rural consumption picking up through multiple measures taken by the government, and also, as I mentioned, the monsoon. The demand for two-wheeler will increase in the festive season, forthcoming festive season. So I'm positive on two-wheelers. We have seen what is the excitement is there around Ola Electric. Of course, that's got a different set of drivers and reasons. But beyond Ola Electric, I think overall two-wheelers, particularly Hero MotoCorp and also Bajaj, we are positive. As far as four-wheelers are concerned, we are also a bit cautious. And you're absolutely right. The inventory at the dealer level is high. And one has to see how this pans out. Of course, we are heading into the festive season and a lot of offtake is expected. But I'll be in a wait and watch mode, particularly because of the fact that the valuations are not cheap. At these kind of valuations, the margin of error is very limited.
What is your understanding of Ola Electric? 75 rupees when it went public, everyone said, ouch, loss-making company. Nothing has changed. But a week from now, the issue price has doubled. Now everyone is saying, ouch, we missed it. So ouch both the ways, right?
Well, Nikunj, I think the FOMO is a big factor in this. And I'm really reasonably confident that FOMO is to an extent driving. But having said that, I think the quarterly numbers which they came up with were a pleasant surprise, I would say. And as the management explained, that if you segregate into two portions, the entire business.
So which part of the ouch are you on? The one who missed it, or the one who said, ouch, we should have bought it?
I'm on the other side. I should have got it.
And the other way, Nuresh has just come from surgery. So Nuresh, I hope the ouches which you had because of pain, that is also over, right?
Yeah, that's over at least.
Chalo, at least one person is happy. Nobody is complaining about that on a Friday evening. Vishal, are markets on course to make a new high? That is what it looks, looking at the market inertia and the market breadth.
A new high might be slightly away from where we think right now, because it's caught up in that range of 24 and 25. 25 being a big psychological number, and it's made a double top there. So it might remain buoyant like right now it is, but we should be more stock specific and sector specific rather than looking at Nifty making new high or not.
Right. Let's actually shift focus to what exactly is happening in the quick commerce space, because quick commerce war is all set to intensify, looks like it, with a brand new entrant on the spectrum. Flipkart is poised to dive into the quick commerce market with the launch of Flipkart Minutes. It's an interesting note coming in from Morgan Stanley, which paints a comparative picture of the charges, the investments, as well as target. Sharad, as always, is here, who's done all the number crunching. Sharad, over to you.
Well, yes, there seems a rising competition coming in the quick commerce space, and as per report by Morgan Stanley, there are certain news triggers which are very important to mark out. Firstly being Flipkart. They have announced Flipkart Minutes. It's a queue service basically, and they are trying it in Bangalore. Certain locations the launch has happened when it comes to Flipkart. Also recently, Zepto raised $340 million, valuing at roughly $5 billion. And over the last 2 months itself, they have raised almost $1 billion. Also, Ola Cabs, they are expected to start their own dark stores as well. And interestingly, Reliance Retail's Jio Mart, they are also expected to start dark stores. Also, the media reports suggest that Reliance Retail may infuse capital in Dunzo, which is a queue service player as well. Now, there is an expected impact for Zomato's Blinkit also. Two important points coming from the report. First is there is and market leadership and aggressive expansion is being rolled out. And the company targets 2,000 dark stores by calendar 2026 end. But now let's look at what the comparison says for the four large players. Where do they stand? The first parameter we have taken is the delivery charges. Over here, for Flipkart Minutes and Blinkit, it ranges between 30 rupees for orders below 99 and 16 rupees for orders between 99 to 209 when it comes to Blinkit. Now also the larger size orders, of course, you will see those orders will be coming in at 0 rupees. Also, let's look at the small cart fees, and whenever a quick service comes up with a small cart fees, it's generally for a smaller size orders, and that's why they charge fees to it. Flipkart Minutes, currently it's new, that's why they have given a nil, no small cart fees, while for Blinkit, Zepto and Swiggy Instamart, it ranges between 15 to 20 across various points. Also, there is a platform handling fees. That is also an important trigger, especially for stakeholders as well as for the users. And over here, Flipkart Minutes, it's on the lower side of 5 rupees. It ranges between Blinkit and Zepto, 4 to 10 rupees. And in the middle is Swiggy Instamart coming in at 7 rupees as a platform or a handling fees. Lastly, the important thing is time. That is what quick commerce is all about. And as per Morgan Stanley's report, Flipkart Minute, it roughly takes around 13 minutes. It's newly launched. Blinkit, Zepto, it's even Stevens at 9 rupees, while on Swiggy Instamart, it's coming on the faster side of 5 minutes.
And let's look at the data. The platform fee, there are two things here. Number one, for Zomato, one is food delivery and second is the quick commerce business. The quick commerce business is now growing for Zomato and perhaps could be bigger than the food delivery business. That's what the management and that's what markets are betting on. However, unlike the food delivery business where there are only two players, Swiggy, Zomato, Zomato, Swiggy, Swiggy, Zomato, whichever way you want to cut it, there are only two players. Reliance has not got into it, Uber Eats has not really taken off, Food Panda, which was acquired by Ola, did not become big. But in the quick commerce business, there were two players, suddenly there are four, and there are murmurs that Reliance may also get into it. And now let's look at the sequence. I mean, Flipkart, again, they have got capacity to burn because they're backed by Walmart. Zepto has raised capital, so they're cash rich, they can afford to burn capital. Third, I think is, let's look at that, assortment. Flip it around, some more names here. So there is Flipkart, there is Zomato, there is Swiggy, and then there is Blinkit. So instead of two players in the food delivery market, there are four players in the quick commerce market. And let's see which way the pie is going to move. But the clean run, what a Zomato and Swiggy have enjoyed in the food service business, that may not be the same kind of a landscape, at least in the entire quick commerce business. That's the point which I think this Morgan Stanley report is trying to bring out. Sudip Bandyopadhyay, you want to comment on that?
Well, Negunj, you're absolutely right. It is a very, very, hotly contested space, and it's going to be more so. I'm reasonably confident Reliance will enter this as well by recapitalizing Dunzo. So I think it is going to be, very, very competitive. Now, the question is of the scope of this entire business. I think the scope is significantly higher than food delivery because it does encompass pretty much everything. Earlier they were only talking about groceries and small items, but now they're talking about consumer durables as well. And the dark stores, numbers of dark stores, the size of dark store, all this is continuously increasing. Now, where the economics works and how the economics works beyond a level, we'll have to all see, because all of these are loss-making. And at this stage, naturally, they're loss-making. But eventually, they have to start making money because that's where the businesses will be rewarded. And we'll have to see which one and how they start making money. Yes, some of them have a lot of money to burn for the time being. But that doesn't make a business. Only burning money doesn't make business. So we'll have to see how they develop the models and how the profitability comes, how the path to profitability also comes.
Right, so that's all about the quick commerce space. Definitely, most of us are the consumers for that particular domain, and we all have been enjoying the fact that we get everything very instantly, isn't it, Nikunj?
No, but that's the way how it is. You think about it, what was the proposition of the whole Amazon Prime? It was that it will give you a quick delivery.
Right.
That was the whole proposition. See, today with connectivity, with speed, with ease of doing business, you are able to get what really could be called as instant gratification. So human nature is all about getting instant gratification. It started with instant tea, instant noodle, and now instant delivery. So instant gratification is something which is now really what really could be called as the second basic human nature. Anybody who is able to give you that instant gratification, whether like I said, instant noodles, instant coffee, instant delivery, you in a sense are benefiting from that big change in terms of the human nature. And what is happening is that most of the companies now, and you look at numbers, and maybe it's a good research thing to do, that most of the companies now getting 5 to 10% of the business from quick commerce. And because of quick commerce, these folks directly get in touch with the quick commerce network companies.
Right.
Let's say you're a Tata consumer, you'll directly get in touch with the quick commerce company. There is no distributor, there is no retailer. And you are going for smaller package. So it is not like a 5 kg atta ka package or a 5 kg oil ka package. It is a half a liter oil can. You may order it 3 times in a month. It could really be 1 kg of atta or 1 kg of rice rather than 5 kg of your monthly purchases. So monthly purchases have become weekly purchases. That's how it is changing.
Right. Also, in case if you want to go ahead and pick up some ice also, that's also available actually in all of these quick commerce places. But the fact that Nikun spoke about instant noodles, it definitely, the name that comes is Nestle, and also along with the Nestle, the entire FMCG pack actually. What exactly is happening in the FMCG space, Vishal, if I could ask you, because given the fact that, okay, we'll get back to Vishal. Let me take this question then to Naresh. Naresh, what's your take coming in on FMCG sector as a whole? Because come the month of June, you saw a massive rally at play in this entire space, that is the FMCG space. But now do you see that rally continuing, going ahead? You think that would be a sector one would want to bet on now?
So we saw that defensive move happen in June because a lot of these stocks were depressed and were sideways for a long time. But the problem is we are still not in a strong uptrend as such. So it is more like a stock where you want to buy on dips, a sector which you want to buy on dips. So if you look at the largest one, which is Hindustan Unilever, the stock had peaked out at 2600 in 2020, post the COVID bump up. And today also the stock is at 2700. So the stock has gone nowhere for the last 4 years. So consolidation has been very long. We've started seeing some names like a Dabur make the initial move. The stock went up from 500, 550 to 650 levels and has now started correcting. So the view is another 3-5% downtick in some of these names. You get a good entry point. But the expectation is not to make very large moves. It still remains a defensive play going forward as well.
Dabur 617. Sudip, is there a reason to be optimistic about FMCG, consumer durables, everything which has got to do with rural India and monsoon in the second half of the trade? Because suddenly that part of the economy is showing signs of green shoots now.
Yeah, absolutely. In fact, if you look at the Q1 numbers, some of these companies, particularly I would say Dabur and all, I think the numbers were a pleasant surprise to the market. Even if you look at Colgate, which gets about 40% of its sales from rural India, the numbers were pretty good and better than expectations. So very clearly, there were some green shoots already visible in the first quarter. Of course, we are heading into a festive season, and the consumption naturally goes up. Also, monsoon has been good, and by and large, the distribution has been okay. We still need a little more, but by and large, it has been okay. So we are hoping for a rural and semi-urban demand recovery, definitely, and that will benefit some of these FMCG companies which have a significant portion of the sales coming from rural semi-urban India. And remember, FMCG as a pack was not really favored for quite some time. So, the valuation, while FMCG valuation is always rich, they haven't really moved up as much as some other sectors had moved up.
So that's the take coming in on those counters. But Naresh, let me come quickly to you and get your BTST ideas for our viewers.
So first is a buy on HCL Tech. The stock has clearly shown leadership in terms of the recovery. Stop loss at 1650, target price of 1700. Second is a buy on HDFC AMC, which continues to hold closer to the 52-week highs, on verge of a breakout. Relative strength as well. Stop loss at 4200, target price of 4300.
That's HDFC AMC. Where is Birla AMC? In fact, Birla group of stocks have done rather well for themselves, whether it is Birla, Aditya Birla Finance, or Aditya Birla AMC, or for that matter, Aditya Birla Retail, ABFRL. Let's look at all those three stocks. Sudeep, is there a trade in any of the Birla stocks and especially the finance funds? Because that's where I think Vishakha and her team are trying to really muscle things around.
I'll come to finance in a minute, Nikunj, but I believe ABFRL, there is a trade. I mean, this company had everything, and look at, if you compare it with Trent, and I think this has been talked about earlier by me also, where Trent has gone and how Trent has performed and what kind of valuation Trent is attracting. And ABFRL is nowhere close. But having said that, I think the opportunity is here and not probably in Trent. I'm not saying there's any problem with Trent. They're doing fantastic. Even the last quarter results were great. But the delta probably is in ABFRL, and a lot of activity is happening there. The group is really focused on extracting value from there. So ABFRL definitely needs to be looked at. As far as the financial part of the business is concerned, Aditya Birla Capital, I think, is a good buy definitely. I'm not getting into the AMC and others. Capital, which has got pretty much presence of the entire financial services spectrum, and they are started doing well. A lot of things which were not going right have been tightened, and things are moving in the right direction for a change after a long time. So AB Capital definitely can be looked at from a long-term point of view.
All right, so that's the view coming in on the Birla group of counters. But let me come to you, Nuresh, and let me get your view coming in on these mining and mineral stocks or other metal stocks. They saw a sharp decline on Wednesday on back of a news flow. You saw the entire sector actually seeing a downtick of as much as 2% or so. No doubt they recovered towards the day's lowest point. But what's your take coming in on the metal space? And which part of the metal space are you bullish on, if you are, that is?
So there are two parts to it. One is what is happening domestically, which led to a correction. And secondly, if you look at global base metal prices, so we saw that huge run in copper when it went from $4 to $5, and we are back to $4. Same way, aluminium went up from 2,300 to 2,700. We are back to 2,300, 2,350. So that tells you the structure is still weak in terms of the base metal prices. They are back to the previous range. So in this case, the consolidation should continue. In terms of stocks, we would still look at a NMDC, which has corrected well from 280 levels to 220 to 200 levels. That would be a good price point to enter. Same way, Vedanta still looks interesting. So mining names are better than compared to the steel and aluminium names as of now. But for now, it has to be a slow and steady move from here on. We may consolidate a lot more than make such, say, high beta moves which used to happen in the sector before.
Right, but Sudip, do you concur with what Nuresh's view is? He's preferring the mining side of the metal pack. Are you also of the view, given the fact that recently you have a negative news development in that particular sector, and the companies are still actually trying to analyze what sort of an impact it would have to their financials? But what's your take? In the metal pack, which side of the fence are you in?
Well, Nuresh has been looking at technicals. Fundamentally, I think, I'm a little skeptical on the entire metal pack at this stage. The mining companies, because of what you just mentioned, I think there are a lot of gray areas still, and it will take some time before we can, kind of identify the quantum of impact the companies will be, getting hit with. As far as global scenario is concerned, while US interest rates are expected to come down, and that is positive for metals, the China slowdown and the challenges in China doesn't augur well for the overall metal sector. So I'm a bit cautious. If I have to pick one company in this space, I will go and pick up Vedanta because of the fact that I think it's a presence across spectrum of metals with leadership or near leadership position in multiple metals. Also, the demerger which is happening and is an advanced stage will definitely lead to value unlocking. So, and of course, on top of that, I think the OFS which they are doing will probably translate back into dividend for the shareholders. They need to do it for taking care of their holding company. So overall, I think it's in a good position and can be looked at from an investor's point of view.
Let's talk about what's exactly happening in the PSU space, because the fact that we've had a lot of these counters see a sharp rally, then a correction, and now subdued moves coming in some of them. In fact, we spoke to Sameer Arora, who's the founder of Helios Capital. He believes that the PSUs as a theme is now over, but what are his views specifically on the railway stocks? Let's hear out.
PSU stocks at best will grow at 15-20%. I'm talking about earnings here, right? Because these are like single digit or early double digit margin businesses. If the economy is growing at 12-13% nominal GDP, then these businesses will grow at 15 to 18%.
True. So some of these things, we used to, for example, I've said in the past, I think from my budget day or whatever, that's like these railway stocks. Now, in these railway stocks, we were at that time, now we don't have, but we had this thing that, Vande Bharat will come and these guys will sell food and the other guy will sell rakes. And then after a few days, you realize that now the Vande Bharat orders are being cancelled because the government has rightly, or at least based on feedback from this thing, thought that they should rather invest money on tracks and on security and on safety and maybe on non-air conditioned coaches and trains and things like that. So all the
All right, and moving on, in a bid to boost the economic prospects of Andhra Pradesh, the Chief Minister N. Chandrababu Naidu met with Tata Group Chairman, that's N. Chandrasekaran, in Amravati. After the meeting, Naidu took to the social media platform X to announce that the formation of the task force for the economic development of the Swarna Andhra Pradesh 2047, comprising intellectuals and industry leaders. The Chief Minister also revealed that Chandrasekaran has been appointed as the co-chair of the force. All right, and let's take a look at what the markets are doing. The fact that we are going to wind down for trade in the next 2 minutes. Firstly, let me thank Sudip as well as Naresh for joining us on the show and sharing your views on various sectors, be it quick commerce or for the fact of the auto pack. As well as Naresh, thank you so much for sharing the technical details with us.
If you like this video, then like, share and subscribe to ET Now.